Question 36. Which of the following is an example of functional obsolescence? A. One bathroom in a 5-bedroom house. B. One electrical outlet in a kitchen. C. Both A and B. D. Neither A nor B. Correct answer is C. Both A and B. Functional obsolescence refers to a loss in value due to outdated design, inefficient use of space, or other features that make a property less desirable or useful compared to newer properties. Both examples given are classic examples of functional obsolescence. A. One bathroom in a 5-bedroom house. This is a poor layout for a house of that size. Modern buyers expect more bathrooms in larger homes, making this design functionally obsolete. B. One electrical outlet in a kitchen. Modern kitchens require numerous electrical outlets to accommodate appliances. A kitchen with only one outlet is outdated and inconvenient, making it functionally obsolete. Question 37. Merging two or more adjoining properties into one is called A. Assemblage. B. Joining. C. Land merger. D. Estate buildup. Correct answer is A. Assemblage. Assemblage is the process of merging two or more adjoining properties into one larger parcel. The increased value of the combined parcel is often greater than the sum of the individual properties' values, a concept known as plottage. Question 38. State usury laws, which regulate limits on interest rates that can be charged on a loan, are applicable to A. Private lenders. B. Institutional lenders. C. Savings banks. D. All of the above. Correct answer is A. Private lenders. Some institutional lenders may have exemptions or different rules regarding usury laws in certain states. It's not universally true that they are completely exempt. Usury laws can and do sometimes apply to institutional lenders, though they often have higher thresholds or specific regulations that apply to them. It's a complex area that varies by state. Therefore, private lenders is definitely covered by usury laws. Saying that institutional lenders are not governed by them is a generalization that's not always accurate. It's more accurate to say that usury laws primarily target private lenders, but can also impact institutional lenders. Question 39. Which of the following is not considered an estate in real property? A. Leasehold. B. Life estates. C. Trust deed. D. Remainder. Correct answer is C. Trust deed. A leasehold estate grants a tenant the right to possess and use property for a specific period. A life estate grants ownership of property for the duration of someone's life, usually the grantees. A remainder interest is a future interest in property that takes effect after the termination of a preceding estate, such as a life estate. A trust deed, or deed of trust, is a financing instrument, not an estate in real property. It's a legal document that creates a lien on a property as security for a loan. It involves three parties: the borrower, trustor, the lender, beneficiary, and a neutral third party, trustee. It's not a form of ownership itself. Question 40. James, an owner of real property, allows Robert the right for 1 year to enter his property to reach a public highway. This is called A. License. B. Encumbrance. C. Right-of-way. D. Entrance corridor. Correct answer is A. License. An encumbrance is a claim or liability that is attached to real property and may affect its title or use. Encumbrances are more often things like mortgages, liens, or easements. A right-of-way is a legal right to pass over another's land. In this case, Robert is being given a right-of-way. The legal mechanism creating that right-of-way, especially given its temporary and revocable nature, is a license. A right-of-way is more often associated with an easement. This isn't a recognized legal term related to property rights. It's a more general descriptive term. A license is a temporary and revocable permission granted by a property owner, James, to another party, Robert, to use the property for a specific purpose. In this case, James is giving Robert permission to cross his land for 1 year to reach the highway. This is a classic example of a license. Question 41. The term disintermediation refers to A. Large-scale withdrawal of funds from savings accounts. B. Mediating disputes between banks and clients. C. Changes in interest rates. D. Obtaining a loan from a savings bank. Correct answer is A. Large-scale withdrawal of funds from savings accounts. Disintermediation refers to the removal of intermediaries in a process. In finance, it most commonly describes the flow of funds directly from savers to borrowers, bypassing traditional intermediaries like banks and savings institutions. Large-scale withdrawals from savings accounts are a consequence or a symptom of disintermediation. The savers seek higher returns elsewhere, like the stock market or direct lending platforms, thus reducing the funds available for banks to lend. Question 42. If a lease contains a condition that an assignment must have consent of the lessor, and the lessee makes such an assignment without the lessor's consent, the assignment would be a valid if the lessor does not make a formal objection, b voidable as is the lease as well, c voidable but the lease remains binding, d revocable. Correct answer is b voidable as is the lease as well. When a lease requires the lessor's consent for assignment, an assignment made without that consent is generally considered voidable by the lessor. This means the lessor has the option to either accept the assignment or declare it invalid. The lessee, the original tenant, cannot declare the assignment void. Only the lessor can. If the lease explicitly says the lease and the assignment are void if consent isn't given, then voidable, as is the lease as well. Question 43. To commit a misrepresentation, a party must have made an untrue assertion of fact, or ma, which is the equivalent of an assertion of fact. A. Non-disclosure, B. Affirmation, C. Declaration, D. Educated prediction. Correct answer is A. Non-disclosure. Non-disclosure is the failure to volunteer required information. Disclosure is required when a party has offered some facts, but further information is needed to provide an accurate description for the other party, or a relationship of trust and confidence exists between the parties, or a party has access to information not available to the other party. Question 44. The federal income tax is a tax. A. Regressive, B. Progressive, C. Graduated, D. Proportional. Correct answer is B. Progressive. The federal income tax in the United States is a progressive tax system. This means that higher income individuals pay a larger percentage of their income in taxes than lower income individuals. The tax system uses tax brackets, and as income increases, the tax rate applied to that income also increases. Question 45. Fair market value can be defined as A. How much a property is worth, as determined by a broker. B. The price at which a seller will freely sell a property and a buyer will freely buy it. C. How much a property is worth, as determined by the tax assessor. D. The price of comparable properties in the neighborhood. Correct answer is B. The price at which a seller will freely sell a property and a buyer will freely buy it. Fair market value represents the price a willing buyer and seller would agree upon in an open market. This assumes both parties are knowledgeable, acting freely, and without any compulsion to buy or sell. It's a theoretical price representing a balance between supply and demand.